Welcome to This Explainer. All right, today we're going to grab our scalpels, so to speak, and perform a little paycheck autopsy. We are uncovering the hidden gears behind the taxes taken from your hard-earned cash. If you've ever felt that pang of disappointment looking at your pay stub, well, you're in exactly the right place. So let's dive right into an incredibly relatable question. It's that jarring moment that literally hits everyone when they get their very first paycheck, or honestly, pretty much any paycheck after that. You know your hourly rate, you know your salary, you've done the mental math, right? And then, boom, you see your gross pay magically shrink to a much smaller net pay. So where exactly did that gap go? It's a total mystery that leaves millions of us scratching our heads every single payday. Here's our blueprint to solve that mystery today. The paycheck mystery, unpacking Social Security, understanding Medicare, FICA by the numbers, and finally, a gig worker warning. Section 1, the paycheck mystery. We're looking at those mandatory deductions that hit right after your federal and state income taxes. Now, beyond regular income taxes, the ones that fund general government operations, you'll see a very specific acronym on your pay stub, FICA. That stands for the Federal Insurance Contributions Act. Here is the absolute kicker. FICA is an automatic deduction for every single W-2 employee in the country. There are no exceptions, no special loopholes, and absolutely no way to opt out. Whether you're on board or not, this law actually requires you and your employer to systematically contribute a slice of your earnings to two massive federal programs. Section 2, unpacking Social Security. Let's look at the math behind the first and largest half of FICA. Unlike income taxes that just kind of get tossed into a giant pot to, say, build roads or fund the military, these Social Security funds are highly specific. They're earmarked for programs that the vast majority of us will eventually rely on. We're talking monthly income for retired workers, a safety net providing benefits if a worker becomes disabled, and even financial support for surviving family members of deceased workers who paid into the system. It's essentially a mandatory national insurance policy. But what is really fascinating here is the hidden iceberg effect. When you glance at your pay stub, you're only seeing a 6.2% deduction for Social Security. And let's be real, that feels like a lot. But beneath the surface, your employer is secretly matching it, dollar for dollar. Yep, they're paying an additional 6.2% straight to the government on your behalf. So that means a grand total of 12.4% of your gross pay is flowing into the Social Security system, even though you only ever feel the sting of that first 6.2%. But hey, there is actually a ceiling to this tax, and it's known as the Social Security wage base. Basically, this is the maximum annual earnings subject to that 6.2% tax. For the year 2024, this limit was capped at roughly $168,600. To put that simply, if you're fortunate enough to earn more than that wage base in a single calendar year, every single extra dollar you earn above that line is completely safe from the Social Security tax. Your contribution literally maxes out. Section 3. Understanding Medicare, the health safety net. Now, Medicare functions a lot like Social Security, but its mission is strictly medical. It funds health insurance coverage for Americans aged 65 and older, as well as for folks with certain qualifying disabilities. When it comes to how it's actually collected, it mirrors that split system we just talked about. There's an employee rate of 1.45% taken directly from your check, and a matching employer rate of 1.45% paid on your behalf. But there is a major structural difference here that we really need to highlight. This really brilliantly illustrates the contrast. While your Social Security tax safely shuts off after you hit that specific income limit we mentioned, the Medicare tax absolutely does not. It remains relentlessly attached to every single dollar you earn, stretching basically to infinity. Whether you're making $50,000 or $5 million, that 1.45% Medicare tax is coming out of your paycheck. There's simply no upper limit. Section 4, FICA by the numbers. Let's actually do the math and see what these percentages mean for a real-world paycheck. When you combine the pieces of the puzzle we've just explored, you get the magic number for W-2 employees. By adding your 6.2% for Social Security and your 1.45% for Medicare, we arrive at exactly 7.65%. That is the standard, unavoidable chunk of your gross pay that is dedicated entirely to FICA. Let's watch this play out for a hypothetical worker named Samira. Say Samira has a gross monthly pay of $2,240. Step 1. We calculate her Social Security tax at 6.2%, which comes out to $138.88. Step 2. We calculate her Medicare tax at 1.45%, which adds another $32.48. Step 3. We just add them together.
Walking through Samira's paychecks step by step completely demystifies those exact dollars and cents silently pulled from her earnings. A total of $171.36 every single month goes to FICA before she even sees a dime of it.
This serves as your ultimate FICA blueprint. It outlines the employee rates, the invisible employer matches, and the wage limits. But notably, it reveals a sneaky little detail down at the very bottom, an extra 0.9% additional Medicare tax. This special tax kicks in solely for the employee, with zero employer match, only if you happen to earn over $200,000 a year. It's kind of like a progressive twist layered on top of a system that's otherwise largely a flat percentage.
Section 5. The gig worker warning. If you participate in the gig economy, everything we just learned gets a massive and honestly sometimes painful plot twist.
And that plot twist comes in a form of this incredibly high number, 15.3%. See, if you're a freelancer, an independent contractor, an Uber driver, or running your own small business, you do not have an employer to split these taxes with. In the eyes of the government, you are both the employee and the employer, meaning you owe this massive 15.3% self-employment tax on your net business income. You are paying both halves of the FICA pie. This is hands down one of the most vital financial facts that catches new freelancers completely off guard. You are on the hook for the full 12.4% Social Security tax and the full 2.9% Medicare tax. So the absolute most crucial point to take away from this explainer is to never, ever let tax time catch you by surprise. As a rule of thumb, always save at least a quarter, around 25 to 30% of your gig income in a totally separate account just for taxes. Now, zooming out from all the math for just a sec, it's really important to remember why this whole system exists in the first place. These taxes aren't just arbitrary numbers on a pay stub, they're a literal lifeline. Created back in 1935 during the absolute depths of the Great Depression, the system was built when many elderly Americans had zero reliable income. Fast forward to today, it supports over 70 million Americans and stands as the single largest source of income for most retirees. In fact, half of retirees rely on it for more than 50% of their total income. It really is a massive intergenerational transfer of wealth happening right there on line 3 of your pay stub. So I'll leave you with this thought to consider the next time you're staring at your deductions. How does this mandatory investment today shape the societal safety net you are going to step into tomorrow? Because understanding exactly where your money goes right now is the ultimate key to securing and planning for your financial future. Thanks for tuning into this explainer, and keep asking the right questions about your money.